We got major averages in general aiming for the fourth straight day of gains, overcoming concerns about economic growth earlier in the week. Joining us now, Ernesto Ramos, BMO Global Asset Management U.S. Chief Investment Officer, and David Lebovitz, J.P. Morgan Asset Management Global Market Strategist. Good morning to you both. David, I'll start with you. Given that sharp pullback we did see on Monday and the fact that we've not only reversed those losses, but now we're poised to end the week with solid gains here for the major averages, what actually changed?
So, the selling on Monday, when we look at it, felt very technical by nature. It felt very systematic and very orderly. And so, to me, that was more about the trend following community de-risking a little bit. But I think everybody's recognizing that the fundamentals are in pretty good shape right now. I know that there are some concerns that consumption might be a little bit softer than people had expected. Obviously, the inflation data has been coming in a bit hot at the same time as the growth data has been a little bit disappointing. But we're still set for one of the best years for economic growth in the past couple of decades. And furthermore, it does look like we're going to get additional stimulus here in the next couple of weeks, or more information about additional stimulus in the next couple of weeks. And so I think investors are recognizing that, on a 12-month forward basis, the outlook is still looking pretty solid.
All right, I want to dig into that a little bit more. But first, Ernesto, how do you see the market action this week? I mean, certainly we've gotten some pretty strong earnings, stronger results, I think, than had been anticipated. But is there still concern about this actually being a peak earnings season? Or does the guidance we get so far maybe help calm some of those concerns?
Well, the earnings reporting has been very solid so far. Whether it's peak earnings or not, I don't think it's peak earnings yet. I think we got a couple of very good quarters ahead of us still, but I think we're going to be decelerating from these levels, both in terms of earnings growth as well as in terms of GDP growth will stay very strong through the third quarter and then start decelerating. However, there are risks out there in terms of the Delta variant is right now muted in terms of it's spreading quickly, but it's muted in terms of its effect on the economy. However, that could, at the margin, crimp some demand for certain types of activities such as cruises, travel, etc. Inflation data is a big concern, as David pointed out. I think it's going to be sticky. We think it's going to be sticky. And finally, that budget, the infrastructure package may not quite get approved as big as the market expects. So those are all the risks we see at the margin here.
David, you used the word stimulus. When you used that, was that in regards to money that's still making its way out into the market right now from the last COVID relief bill? Is that the child tax credit that's starting to hit people's accounts right now, or is that infrastructure and the other multi-trillion-dollar spending package that are being debated right now?
So I think it's in reality a combination of the three. I think the market is taking its cues from the potential for infrastructure in particular to be delivered here, in the next couple of weeks. And to your point about the child tax credits and the stimulus that was deployed back in March of this year, when we look at the consumer data, when we look at median checking account balances, I mean, consumers are sitting on plenty of dry powder. And to your question earlier, Morgan, what was causing some of that consternation and angst in the market earlier this week? Well, to an extent, it's a concern that consumers may not bounce back as strongly as everybody had originally expected. And so I think that the market is very excited by the prospect of more stimulus later this year, but at the same time asking some questions about whether or not that existing stimulus will deliver the type of economic outturn that, again, people have been penciling in for the better part of the past couple months.
Shepard Smith here. Thanks for watching CNBC on YouTube.